Before we begin, remember to subscribe to our channel and click on the bell icon to get notifications of new videos from Estate 123.
Okay, we are live.
Hey guys.
All right.
Hi. Nora, hi
Hello.
Shimba.
Right. So today we're going to have a very nice discussion about the stock market because recently the KLSE crashed. So what we want to talk about is whether is it now a good time to go into stocks or we still look into properties. So let's hear from our friends here. So we have Laura and Joe to discuss together and
Hello.
Let's
together.
chat together. Let's chat together.
Okay. Actually, I just want to say because this is normally I will go through property news. So sometimes it will touch on stocks, but personally, I don't really go and check KLSE or any kind of stocks news So I'm not really sure how bad is this crash that
Oh, it's
we're
quite
gonna talk about.
good too. It's quite actually quite bad. If you look back into everything started from KLSE. The crash is actually this year is a bit significant after COVID. I think last time when he's talked about the high of almost 2008 2009 touching a time to now is corrected a lot, to be honest. So it's a quite a big crash. I mean, but especially these few months, you got the windfall tax, you got the COVID, Omicron, all this emerging again. So really make the whole stock market haywire. Yeah.
Okay.
Yeah, haywire. I think the titles lead this out. I think we can discuss. Is because of talking about whether there's actually really something in between that the link, right, Laura?
Yeah.
Link.
So
Yeah.
just want to know, right? Because normally for investor, right, some people they just focus on stocks. Some people are property investors, so they just focus on properties. So is there actually a link between the stock market price and the property price?
Okay, good question. You see, last time, just to share, I mean, when we study economics of back to 10 years ago, decade ago, so we always talk about stock market and property has a very strong link. So when the stock market is performing very well, you can see 6 months later, there's a lot of people will jump into it to buy properties, for in the market. So you got interest rate, which is if low, people buying more properties is high. However, I found that fundamentally these days may not be that much of logical discussion there because we talk about some tech stock or PE for 200-300 times, and then some even very good quality property stocks is down. I think that may be something that's subject to many new factors to come in. But if you ask me whether got link or not, you're right. You got people from KLSE who invest stock, you got people who invest property, you got people who invest property and stocks together. You got people who possibly don't invest these two. But you have to admit that today KLSE is actually one of the a stock market basically in every country is basically tied to the liquidity of almost the market. There's too many retail players, institutional players are all inside, even pension funds are all inside. If the market is not performing well, to be honest, I mean, of course, it will impact, the money that able to spend on buying assets. Stocks is actually always considered something that very, very short term, short to mid term, very hard to be long term these days, to be honest. So if you got to compare the property, it's going to be very long term. But however, if the market is crash, no people has the money to buy it. Like for example, this year KLSE crash, until 2005 and below due to many reasons. So even the memorandum, of the for the banks, who actually allow people to be really paid later, also hit the stocks, but in a way, it's also hit the dividend. So just imagine, if the dividend, I mean the extra money disposable or whatever purchasing power income is not coming from the market, coming from a dividend point of view, the interest rate is so low these days. So I mean, of course, I feel there is a strong link in between still the KLSE and stock market in the property market. So you will see some very very tough times still for property at this point in time. Yeah, that's why the government go with the HOC, the kind of like free stamp duty promotions and stuff like that. So I think that's the
Okay, so like you mentioned, the government is coming up with all those HOC and other schemes to help people buy houses.
Yep.
So, but in terms of, because you're saying the KLSE has crashed and the let's say the price is low lah considered. So is it actually a good time to buy stocks, or is it a good time to buy property, or maybe both?
Good discussion together. I think if you were to ask me, always is like stock is something that low short to mid term. Okay, short to mid term. So if you think that today is the good time to buy stocks, I mean, it maybe go even further lower. We don't know yet. So it may be really from this point it going up again. So depend on what kind of like appetite of an investor. If you are speculators, are you a long-term investor or mid-term investor? So that depends. So to me, I feel that just my 2 cents is that I mean maybe I feel that we should be really having both portfolio in for every people. Yeah. So if you think that you have not got anything to good buy, you buy a property, then maybe a good time to buy now. You don't know. I mean, presume that today, to be some people think that the next year market may come back. You never know. Or Omicron may come, or another guys may come again. The variants.
Yeah.
We don't know it. So, but I would say, I mean, look for the right property, and the property, if it's really right, then you think it's really good to hold for long term. That would be something is good to buy now. I mean, there's no impact in between the two.
Yeah, I do agree with Joe on this because especially even on the stock market, there are some stocks that I do notice is kind of a bit undervalued now. So can we consider it like something that we can like put some money there, then use that money as earning some dividend from there, and then hopefully with that dividend next time we can use it to pay some extra on some properties that we want to buy.
You can, but I think to be honest, if you my experience is very hard to get. That depends on whether you are how loaded you are. To be honest, let's say if you do not have a lot of like investment, I mean like funds available. So you buy into stocks now, perhaps even some of the blue chips or some of the stock that can gain even 100%. You may not have that much of money. Let's say you put in 10,000, you may win 10,000, so you got 20,000. But looking into this hyperinflation problem in the world, because people, too many central banks printed money for to help the whole world to gone through this crisis. So then money becomes smaller, and then things become much more expensive. You will see somehow, the inflation, like now these days we talk about vegetables, all these things it's keep coming out. It's actually not happening in Malaysia alone. It's everywhere, in Australia, in Japan, in China, in US, everywhere. So when this happen, of course, that may be something you have to think about if you buy in the stock compared to buy a property. If you buy a property now, if you can find something that really you do not have to pay deposit, you can really leverage on your current income, still sustainable income, in a way you are hedging the property with the loan that can really go for maybe 3 to 5 years later in the market. I mean, I would say, so the return is definitely better than stocks, to be honest, because if you can't borrow 500,000 to buy stocks if you do not have one-to-one cash.
That's a good point.
Yeah, you can buy 500,000 you can really loan 90% of 500,000 to buy a property.
And the property is more inflation proof than anything else.
Yeah, to be honest, property may not be Malaysia property is not like I don't feel like it is like overseas that we have that kind of like huge capital gain. But in a way, I mean, from this experience, I mean, we passed through this century with tsunami, with Iraqi war. You have the stock market crash. The Lehman Brothers bonds problems, 1997 crisis until today. You have COVID crisis. Possibly, we have tested a lot of strong crisis. In the world. So you still think that it's something if you put everything into one basket in stocks. It's very difficult. If you are not unlucky, you may hit into some stocks, if not the top 3, top 5 blue chips, you may become nothing and zero. Yeah. Because, AirAsia, who knows that 3 years ago, AirAsia can be negative in net tangible asset because of this problem. It's not their fault. It's because of the COVID. So no one even knows. There's something that really can make the whole world do not travel for 2 years.
Yeah, that's true.
But if you look at stocks, properties, if you hold, it's sustainable. Yeah, maybe you don't have a rental income, but you don't have immediate market to people to sell. But as long as you are still in a long-term perspective to hold the properties, you do not really deflate the value a lot. So that's why you still need property, in a way. Yeah. And my advice is that it's going to be very if it's going to be looking really bad in the next few years, even if COVID's passed by, because why? Imagine COVID, everything gone, if everything back to normal, you can just see that how much debts this world central bank has printed, and money becomes super small. When you're super small, the only thing you can hedge is hedging in the, in the blue chip stocks, or hedging in the property. You got to do something on that. Otherwise, it's pretty difficult, to be honest.
Okay.
I feel that. Yeah.
So from what we've discussed so far, property of course is a good choice for investment. But personally, do you think stocks or property is better?
No, there's nothing is better and bad, to be like I say, if I were to be, let's say I do not hold any stock, I do not hold any property at this point in time, I will definitely find some good quality stocks in the market which is undervalued. And at the same time, I will only consider, at this point in time, I will consider really won't have any climate or COVID impact on that stocks that I will buy. Yeah. Okay, then I may make less, but at least it's more stable, because I don't want to be in trouble to know that what if the pandemic keep on going on and on. So you never know. Yeah. So, but at the same time, because if I got a stable earning, I can also use my power to go and buy properties. At this point in time, if you can go to buy properties, you got 90%, you got HOC, you got no need to pay deposit, you got a very good hedge, which take 3 years to build. So by then, you may just only need to support some low interest rate payment per year, and then after 3 years, you got a very good potential to reap the profit. So that's a optimistic scenario. What if everything is very bad? Everything is bad. If everything is very bad, then you don't have to worry about it. It's everyone die together, to be honest. I think the stock market will go down, the property market will go down, everything will go down, and then the world country will think about another way to how to something like memorandum to pass through the situation again. It's too big to fall, to be honest, at this point in time.
Oh.
So it's good to go and really pick up something you need to do. Rather than here, KLSE is crashed. There's a big link in property and stock. That is why you can see that property is not doing very well. I don't think it's doing well. Sometimes I don't see the data is relevant. I don't think it's doing well. You can go to the mall, you can see how many people are not renting, going out. It's not doing well. Except I see lately if you're landed, if you are freehold, landed is one thing. If freehold is another one thing. People will rush for it. They will rush for it. So due to apartment is too overbuilt now, to be honest. So the value of apartment may not be that good at this point in time. So and you can see some very good response from some of the projects in the market, but you can still see some of the property like apartments, that's property developer A in a very, very good transit-oriented project, So just only 100 meters to the station with shopping mall, you still have to sell 2 years for 80%, okay, to be sold. When in compared to those landed property with a freehold, perhaps even a bit more slightly higher the price, I think you can see that it just only sell out for a few days of 1 or 2 months time. Yeah. So that's something that is good to take a look. In a way.
Yeah.
It's
also
our radio station.
Individual.
Sorry. Individual is definitely individual, because some people don't like to hold responsibility, to be honest. I got some friends, yes, they do not like to hold responsibility to be paying installment. Some just like stock to be free up. I get to say it is true that there's a lot of people in the world that they have their own taste and own styles. Yeah. But if you were to ask me whether there's a link at a good time or not, I think that's a brilliant time that you can go in. Brilliant time. But to what extent, if you have to go through this pandemic further, at least another 1 to 2 years time, we never know.
So you're saying this situation, the stock markets won't suddenly go back up so quickly, right?
It definitely won't anymore. It definitely won't, because why? It is already gone up V compared to last year. Okay. From now, I don't think you can see any V anymore, but perhaps maybe it's a slightly gradual increase. From now, when even recover, but that is quite subjective. Like we really don't know. Really,
maybe, yeah, like you said, maybe there's another variant or something else comes up.
Yeah, but the point is that you still have to have someone a place to stay. That's what I say.
Yeah.
I personally will not invest into office and retail now. So I think for people to stay a house, you still need that because we do not have enough house, at this point in time. Yeah. Well, hopefully this guy is very good discussion at the radio station. But I think hopefully we see this will go away. But I mean, yeah, it's a sad thing. I mean, this 1 year. But you have to optimistic about it. There's nothing we can do.
Yeah. So far, I think the news has been quite optimistic. Besides the vegetable price increase.
Actually, in fact, it's quite a lot. I have some news from a lot of developers' friends also saying that the materials has been increasing a lot, and due to the market may not be able to absorb it, so they can't, and there are some project delay to launch it because the market just can't absorb the price now. Yeah. Yeah, but I think if you look into the world, this world, the human and the economic markets has been adapted for that long. Somehow, even if the pandemic is going to be problem, the world is going to adjust to it. You get my point. I mean, no matter lifestyle, no matter the financial market, the products and the service, everything will readjust, and find the balance itself. So then you can call it nature force. So the nature force eventually will do that. You whether you like it or not, if you do that. So it may be going through a very painful further period, or whatever. Some people will foul out, some people will come in, some win, some lose, that will be something like that for sure.
Okay. All right.
Okay.
I think
that's all.
Time is almost up.
Yeah, good day. Yeah, that's a good. Yeah.
All right. You actually learned quite a lot about this stocks versus property in today's session.
Let's chat more if we have time. Don't worry. I mean, anytime.
We have more sessions like this.
More
sessions to discuss on the.
I will also go out to dig up more people to think of about what they like to hear, and we see how we can discuss more in the content together.
Yeah, sure.
All right.
That's great.
All right.
Right.
Okay.
Good day. Thanks
Thank
everyone
you, Joe.
for your time.
Thank you. Thanks, Lauren.
Thanks everyone for joining the session. All right. Thanks.
Bye bye.
All right. Bye bye.